Let us discuss the topic current assets. What are current assets? Assets that are expected to be converted into cash or consumed within an operating cycle of a business, usually about 12 months, are called current assets. What are some of the uses of current assets? Current assets are essential for day-to-day functioning of a business, providing the necessary liquidity and financial flexibility to respond to changing market conditions and seize new opportunities. Some examples of current assets are cash and cash equivalents. This includes cash, money, market funds, treasury bills, accounts receivable. This includes all outstanding invoices that the company has to pay. Inventory. It includes raw material, work in progress, and finished goods. Prepaid expenses, such as prepaid rent, anything that your company has already paid in advance. Marketable securities, including stocks and bonds. Some key highlights of current assets. Liquidity. Current assets are expected to be converted into cash within 1 year. Types. Current assets includes cash and cash equivalents, accounts receivable, inventory, prepaid expenses, and marketable securities. They support daily operations. Current assets are essential for covering short-term liabilities and managing day-to-day expenses. Current assets also indicate the financial health of a company, such as high levels of current assets can indicate good liquidity and financial stability.